morning, everyone. Welcome to 2 Minutes with Todd. My name is Todd Jones. I'm the Chief Investment Officer for Gratis Capital. Thanks for joining us today. Let's take a look at some market activity from last week. And last week was a bit of a wild week, as I'm sure you are all aware. We did a special 2 Minutes with Todd update immediately following the Russian invasion of Ukraine. And believe it or not, equity markets in the U.S. at least ended on a positive note for the week, as investors are looking past some of the shorter-term impacts of a kinetic conflict in the Ukraine and focusing efforts or their gaze on fundamentals of the market, which for the U.S. continue to still be pretty decent. And I think one measure of that would be earnings reported by the S&P 500 companies. So far in Q4 earnings having been reported through, and roughly 77 or 78% of those companies are reporting beats on earnings and 77 on revenue, according to JP Morgan. So still a pretty decent picture there. You can see S&P for the week ended up plus 0.15%. Russell 2000 small cap index ended up 0.65. International developed markets were impacted a bit more. I think Germany, Spain, Italy, they were down on average 1.32%. Bond market was exactly flat, which is a little bit perplexing given the risk off activity and sentiment, but nonetheless something we have to note. Commodity markets were up 0.26%. And then ARKK, the ARK Innovation ETF, our proxy for speculative growth companies, is actually down only very slightly at 0.48%. And looking past some of this very dramatic market activity for the week, we would just want to point out that inflation expectations do appear to be cooling off quite a bit. And I think you can see some of that coming through in chart 1 of the slide deck, showing the difference between the 10-year U.S. bond and the 2-year U.S. bond. And generally speaking, when that line is going up, it means economic activity and also inflation is expected to be higher in the future. If that line is going down, however, like it is right now, it's that participants in the bond market are expecting economic activity be slowing and therefore inflation to be slowing along with it in the future. And so what is this chart telling us at the moment? Well, it does suggest that inflation expectations will be moderating here in the not too distant future. Maybe that's because a recession could be on the horizon as a result of this market disruptions or just a slowing of global growth. Nonetheless, whatever that specific reason is, inflation expectations are moderating, and that's very positive, I think, for risk assets longer term. Additionally, another positive aspect I would point to is on chart 2, and that is the more speculative parts of the market, in this case, the NASDAQ, are all flashing signs that we might be reaching some oversold conditions. So what you see on the chart, on chart 2, is that the number of stocks trading above their 200-day moving average, which is kind of a proxy for the long-term trend in those stocks, is suggesting that we're nearing a pretty oversold point because only 20% of the components in the NASDAQ 100 are trading above their 200-day moving average. On average, this level would be somewhere between 40 to 50, and being down in the 20s level, I think, suggests that market participants are selling what they can, panic selling to some degree, whereas in the future, we might have a little bit better outlook with a lower starting point. Thanks for joining us today. We look forward to speaking to you again sometime soon, and please remember to tune in to our Market Matters episode tomorrow at 2 p.m. Thanks.
All price references and market forecasts correspond to the date of this recording. The information contained does not constitute research or recommendation from Gratis Capital to the listener. Gratis Capital is not providing any financial, economic, legal, accounting, or tax advice or recommendations in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by Gratis Capital to that listener.